Hi guys, welcome to another video from Little to Simple. Anil Ambani, once a titan of Indian industry and scion of one of the wealthiest families in the world, saw his fortune dwindle dramatically due to a series of strategic missteps, ill-fated decisions and external pressures. This story serves as a cautionary tale about the volatility of inherited wealth and the importance of astute management and adaptation in the face of changing business environments. The legacy. Anil Ambani was born into the Ambani family, with his father Dhirubhai Ambani being the founder of Reliance Industries, a conglomerate that became synonymous with industrial success in India. Dhirubhai's business acumen turned Reliance into a powerhouse, dealing in petrochemicals, textiles, telecommunications and other sectors. Upon Dhirubhai's death in 2002, his empire was split between his two sons Mukesh and Anil. Following a bitter feud that necessitated intervention from their mother Kokilaben Ambani, Anil received control of Reliance Communications, Reliance Capital, Reliance Energy and Reliance Natural Resources Limited. These were lucrative and promising sectors, and Anil was poised to carry forward his father's legacy. However, the subsequent years revealed a stark divergence in the fortunes of the two brothers, with Mukesh's companies flourishing while Anil's enterprises faced a downward spiral. Overambition. One of the primary reasons for Anil Ambani's downfall was his over-ambitious expansion strategy. Under his leadership, Reliance Communications aimed to become a major player in the global telecommunications market. This ambition led to significant capital expenditure on infrastructure and acquisitions. For instance, in 2005, Arcom acquired Flag Telecom, an international network service provider, for $207 million. The move was intended to bolster Arcom's global reach, but the high cost of integration and competition eroded its profitability. Anil also diversified into sectors that required substantial upfront investments. His ventures in power and infrastructure, including Reliance Power and Reliance Infrastructure, demanded heavy capital expenditures. To finance these expansions, Anil's companies took massive debts. The global financial crisis of 2008 exacerbated the situation, making it difficult to service these debts as revenues did not grow as anticipated. The debacle. The Indian telecommunications sector, once a goldmine, turned into a fierce battleground with the entry of new players and the disruptive pricing strategies they brought. Anil's Arcom faced intense competition from companies like Bharti Airtel and state-owned BSNL. However, the most formidable challenge came from Mukesh Ambani's Reliance Jio, which entered the market in 2016 with aggressive pricing, offering free voice calls and low-cost data services. Jio's entry transformed the telecom landscape, leading to a price war that significantly reduced profit margins for all players. Arcom, already struggling with debt and declining market share, could not compete with Jio's deep pockets and innovative strategies. The company's revenue plummeted, and it became impossible to service its massive debts. In 2017, Arcom announced its decision to shut down its wireless operations, marking the beginning of the end for what was once the flagship of Anil Ambani's business empire. Legal battles and regulatory hurdles. Anil Ambani's businesses also face numerous legal and regulatory challenges. One prominent case involved Reliance Natural Resources Limited and its dispute with Mukesh Ambani's Reliance Industries Limited over the supply of gas. The matter reached the Supreme Court of India, which ruled in favor of Reliance Industries Limited, dealing a significant blow to Anil's business interests. Moreover, the Indian regulatory environment became increasingly stringent, especially in the telecom sector. The Supreme Court's verdict in the adjusted gross revenue came imposed heavy liabilities on telecom companies, including Reliance Communications. The court mandated that these companies pay dues amounting to billions of dollars, further crippling Reliance Communications' financial stability. The failed strategy. Several of Anil Ambani's strategic decisions backfired, leading to substantial financial losses. His foray into the entertainment industry through Reliance Entertainment, which included investments in Hollywood productions like DreamWorks SKG, did not yield the expected returns. These ventures, while high-profile, were capital-intensive and failed to achieve profitability. Additionally, governance issues with Anil's companies eroded investor confidence. There were allegations of financial mismanagement and lack of transparency, which further tarnished the reputation of his enterprises. The lack of a cohesive and visionary leadership strategy contrasted sharply with Mukesh Ambani's methodical and future-oriented approach, which consistently attracted investor trust and capital. The external pressures. External economic factors also played a significant role in Anil Ambani's downfall. The global financial crisis of 2008 had far-reaching impacts on businesses worldwide, including those in India. Anil's heavily leveraged companies found it increasingly difficult to secure financing, and subsequent economic slowdown affected revenue streams across his business portfolio. Moreover, the depreciation of the Indian rupee increased the cost of servicing foreign debts, adding to the financial strain. The combination of high debt, decreasing revenues, and increasing costs created a perfect storm that Anil's businesses could not weather. The final blow. By the late 2010s, the writing was on the wall for Anil Ambani's business empire. Reliance Communications filed for bankruptcy in 2019 after failing to find a buyer for its assets and defaulting on its debt repayments. This was a significant fall from grace for a company that had once been a leader in the telecom sector. Legal troubles compounded Anil's woes. In 2020, he was ordered by a UK court to pay $700 million to Chinese banks who had sued him for defaulting on loans. Anil claimed that his net worth had fallen to zero, a staggering admission for someone who had once been among the richest people in the world. Lessons learned. Anil Ambani's journey from riches to near bankruptcy offers several important lessons. Firstly, the importance of prudent financial management cannot be overstated. His reliance on debt to fuel expansion was a critical error, particularly in volatile and capital-intensive sectors. Companies must balance growth ambitions with financial sustainability, ensuring they are not over-leveraged and vulnerable to economic downturns. Secondly, adaptability and innovation are crucial in a rapidly changing business landscape. Anil failed to anticipate and respond to the disruptive impact of new entrants like Reliance Jio in the telecom sector. Businesses must continually innovate and adapt their strategies to remain competitive. Thirdly, governance and transparency are vital for maintaining investor confidence. Allegations of financial mismanagement and governance issues within Anil's companies eroded trust and made it difficult to attract and retain investment. Strong corporate governance practices are essential for long-term success and stability. Lastly, diversification, while generally a sound strategy, must be approached with caution. Anil's ventures into diverse sectors like power, infrastructure, and entertainment spread his resources thin and exposed him to multiple sector-specific risks. Diversification should be strategically planned, ensuring that the core business remains robust and can support new ventures. Anil Ambani's story is a poignant reminder that inherited wealth and a strong start do not guarantee sustained success. His downfall was a result of a combination of over-ambitious expansion, high debt levels, intense competition, regulatory challenges, and governance issues. While external economic factors played a role, many of the challenges he faced were exacerbated by his strategic missteps and management decisions. In contrast, Mukesh Ambani's focused and innovative approach has led Reliance Industries to greater heights, highlighting the importance of strategic vision, financial prudence, and adaptability. The Ambani brothers' divergent paths underscore the critical role of leadership in shaping the fortunes of business empires. Anil Ambani's journey serves as a valuable lesson for business leaders and entrepreneurs on the perils of mismanagement and the importance of strategic foresight and resilience. See you all again in our next video, and until next time, have a good one, guys.